There's an old adage, don't fight the Fed. Is that happening right now?
I think people have to be concerned right now about whether the market is in fact fighting the Fed. What we've seen over the past month or so is another leg up in the rally and another assault on all-time highs. And that certainly predicated on a favorable monetary background, whether or not there's still tax reform to be had, and just general overall enthusiasm. One of the things, though, that I would have to keep in mind is, are we indeed seeing the Fed, if not tapping on the brakes, certainly taking their foot off the accelerator? And I would say the evidence tends to be, at least they're taking their foot off the accelerator. It's widely believed now that there could be yet another interest rate hike in December. The Fed is talking about how to reduce their balance sheet, which is in and of itself ending or cutting back the policy of quantitative easing, which is an unprecedented type of policy. So what you are starting to see is some can argue that maybe the interest rate hikes could be a way of putting their foot on the brake a little bit. I'd certainly say that the accelerator is being pressed less aggressively. One good thing to keep in mind, though, is that it's very difficult to get a consensus out of what the Fed is doing sometimes. After Yellen's most recent speech, we clicked on some headlines, and one major business news organization was reporting that Yellen remains dovish, while the other two were saying, beware of proactive rate hikes, and that she won't be afraid to raise rates even if you don't see a 2% inflation target. So if you have two out of three skilled media observers disagreeing as to what she said in a well-publicized speech, you have to wonder if the market, somebody's going to be right, somebody's going to be wrong. That time does tell on that one, but in the short term, one might have to wonder where we're going from here.